afternoon, everyone, and welcome to our special meeting, Fed meeting review. It's the 3rd of May, 2023. We're glad you're with us. Vince and I just wanted to go through what the Fed announcement consisted of and what we can look forward to in the markets. My name is Raul. I'm the coaching and education coordinator here at Trading Winds. That over there is our head trader, Vince. We'll get to him momentarily. So the news from the top, as expected, a 25 basis point hike from the Fed, a little bit of language that says that they're going to hold steady for the next little bit. Let's get into it right away. Talk to our good friend Vince. Vince, what did you think of the announcement?
Yes, I think it came in exactly as expected. Not only did they raise a quarter point like everyone thought they would, but they did remove any language that said that, at this point they feel it may be necessary to raise even more. So they've, basically told everyone that they're going to stand pat for now and then, monitor things as more data points become available. But for now, quarter point today and a pause. So it's exactly what was expected.
We had talked earlier. I'll let you share your screen so we can
Yes.
look at some charts. I had asked you earlier in one of our training sessions with our pro group.
Actually, can you enable, I need to have access to share my screen, sorry.
Of course, give me a second. There you go.
Great.
I'd asked you earlier what kind of language you were looking for from the Fed to get direction one way or the other. Did you get any direction from the Fed's comments today?
No, nothing other than, them basically saying that they're going to pause for now. So, no, we didn't really get any idea of how long they're going to pause or what it would take for them to start raising again or cutting rates. Nothing, along those lines, but they did remove any language saying they thought it might be necessary to hike some more. So I think the market got exactly what it was looking for. As you can see here, if you look to the right on my watch list, the Dow, the S&P, NASDAQ, Russell, all very, very flat on the day. So no movement whatsoever. Usually once the Fed releases their decision, or at least once Fed Chairman Powell starts to speak, you usually see a pretty big swing back and forth. Today, you can see the bar from high to low, much smaller than the last few days. Absolutely no reaction to this at all. It was exactly as we expected. And not only that, he did, as part of his speech, start off by saying that he believes the banks are, I forget the word he used, basically saying they're solid, that there isn't a problem there. Now, that seems a little hard to believe at this point with everything we know about the banks and the troubles they're going through, but he basically reassured everyone that the banks are fine. So yeah, we got basically what we thought we got. So it's absolutely no reaction whatsoever here.
It seems like it. So when you and I were talking on Monday, we were looking at the implied move as per the options. So we looked at, this was on the 1st of May, and we looked at, SPY was around, I want to say 416 and change at the time. We looked at a strangle, which was a 417 call and a 416 put expiring at the end of the day today.
Right.
Do you remember how much it was trading at that time when we looked at it?
I don't.
It was right around $4.11 with an
Okay.
implied volatility of about 16%.
Very
And it
low.
just seemed really low.
Yes.
When you compared it to previous Fed announcement situations.
Right.
So we thought, we'd take a shot at it. Of course, the theta is really working against you in such a short amount of time.
Sure.
Believe it or not, that combo hit about $6.20 this morning before the announcement. It's now down to just around 385 to 390.
Wow. So
it's moving fast. So yes, you can see all of the volatility has come out of it post 2:30 p.m. Eastern time.
That's right.
But did the market makers, were they understating the expected volatility?
No, yeah, I don't think they were necessarily understate. Maybe they went too far, but yeah, they certainly were not expecting much. It's rare that we see vol of what was it, 16%, you said?
That's right.
That,
Yes.
that's incredibly low on the SPY contract. So yeah, right. This is what they were expecting. Maybe they went a little too far and taking it to 16%, but uh yeah, absolutely. They weren't expecting much, and turns out they were right. Absolutely.
We've been talking about Tesla for quite some time.
Hmm.
It seems to be finding support right at that 160 area, doing pretty well today, about 1.5% to the good side,
Yeah.
$3.73. Does this convince you that it's stabilized here?
No, I don't think so. There are a lot of red flags on Tesla and a lot of negatives when we look at the chart. And I'll use the weekly chart because it's a good medium term outlook here. What we see on Tesla is that it's been dropping for quite some time, going back to this high here, the all-time high that happened in November of 2021. Ever since then, it has been a fairly steady drop. If you look at the major pivot highs, it's all lower highs ever since November of 2021. And now we're into an area, excuse me, where when we look to our left, there's very little support here. So once we got below all of this activity here, this 180 level, the prior time it got below there, it pretty much got to 100 very quickly. Then bounced, hung around just above that 20 MA for a little while. Now it's back below. So what I see happening here is a move not only back to 100 here to retest that. I don't think this will hold if we get back here again to retest it. So from there, I think we can go as low as $20. And that may sound ridiculous, but if I told you back in November of 2021 that Tesla would go from 420 to 160, you would probably said that was ridiculous at that point. So no, I do think this is going to 20. Certainly it's not going to happen overnight. Going to take many, many weeks or months, but it is slowly but surely dropping here. And I think next level is 100. From there, we go to 20.
Last question. We got Apple earnings coming up tomorrow. That's also like a Fed announcement event,
Yes.
because Apple really is the market.
Yes.
One of our members recently mentioned to us that if you took Apple, Nvidia, Microsoft,
Amazon,
Meta, and
Yep.
Netflix, maybe,
Yeah. Mm-hmm.
that it makes up about 25% of the S&P, which seems like a really, really big number.
It is a big number, especially when you compare it to prior years. That is huge. But there's no question Apple is the stock that most people look at. And, financially, it's one of the, if not the most sound financial companies out there. I mean, they're doing great. So having earnings coming out tomorrow after the market close is a big deal, because if they come out with weak numbers, or especially if they provide lower forward guidance, if they're concerned about this economy slowing, that's going to be a big signal to everyone and a big point of concern. So, right now, when we look at this chart, and I'll start with the daily because it has been rallying nicely recently. And then we look at the weekly, and you can see how close it is to those all-time highs. So really, there's very little overhead resistance, if anything. And so this comes down now to earnings. If earnings are good, we will likely see Apple at new all-time highs very, very soon, in the next day or two, potentially. If they're weak, and especially if the forward guidance is weak, then we may see a breakdown. And, with the amount of weight it carries in the index, and just, the sheer number of people that pay attention to Apple, if this can make or break the market. And so tomorrow's announcement is going to be big. Also, one point I want to make before we sign off is a while ago when we were talking about this earnings season, we said it would be important to see how companies would be doing in this economy, but next earnings season is going to be much more important. We'll have another 3 months of data, and we'll I'm sure at that point be able to see a clear trend of where this economy is heading. So although there's been some big announcements, and tomorrow night is going to be huge with Apple, the next quarter's earnings announcements are going to be huge, I think.
All right. I want to clarify one thing. As per Yahoo Finance
Mm-hmm.
and ETF DB, this is as of yesterday, Apple, Microsoft, Amazon, NVIDIA, Alphabet, Berkshire, Meta, and Exxon make up about 27% of the S&P.
Yeah, big names, big names. And, what concerned me about a lot of those, more a little while ago than now, because many of them have recovered quite a bit. When Apple was down here, was the real lack of support, because that move from 2020 to 2022, was so sharp and so quick that it left very little support below. So at this point, we're very concerned that Apple might not hold this level and might start to really fall rapidly. And other charts like Amazon and Alphabet and so on were in a similar spot. Now we've had a bit of a rally. So we have a bit of a buffer here. Even if earnings are poor and it drops, there is some more support here on Apple. But should it be a huge surprise in some way, and this cuts through all of the support, that's when the market really turns ugly, I think, is if you see Apple below 130, there's trouble. There's big trouble out there. So it's just a level to remember going forward. But, again, we can all, like I said earlier, we can be at new all-time highs in the next few days. So we'll see.
Earnings, as we know, completely unpredictable. We've seen that happen last week with a few different names.
That's right.
If I gave you the option of two, if I gave you the choice, let's not use the word option, between two different option combinations, you can buy the S&P or the SPY.
Okay.
411 put, 412 call. It's at 411 right now, so it's a bit of a strangle here for $5.
Yeah.
Or you can have an Apple straddle at 170 for $690, all expiring on Friday. Do you take one, both, neither?
At this point, I mean, with the Fed giving us exactly what we want and the market really not moving a whole lot, I would have probably said I'd skip both. But I'm going to go with the Apple position. I do think there's a chance for movement there, one way or the other, because, like I said, if even if they just come in line with expectations and give everybody exactly what they're expecting, we're so close to the all-time high that it could continue moving up here and have a strong move. On the flip side, if there's anything negative, I think it'll be a big gap lower. So having a strangle on Apple, I think, is my choice.
Problem here is the theta decay. You're spending $690 on this combination.
Totally.
You're losing about 160 a day for now, and it's going to accelerate as we get closer and as we get past the announcement.
That's right. So we're going to need a big move for it to actually make you any money, for sure. There's a ton of risk there, no question.
All right, that's our post-Fed announcement review. We'll be back tomorrow with an update. Vince will be back with an update for our pro members. If you'd like to join, there will be links in the discussion below. We want to thank you for joining us. I'm Raul. He's Vince. We'll see you next time.
Take care, everyone. We'll see you next time.